Hello and welcome to Dialogue. China's GDP expanded 4.9% in the third quarter of 2021 amid the coronavirus pandemic and rising economic challenges. Data from the National Bureau of Statistics show that China's GDP grew 9.8% year-on-year in the first three quarters to hit a total of 82.31 trillion yuan or $12.8 trillion. What does the number tell us about China's economic development? And how does this reflect people's lifestyle changes? And what are the challenges ahead? To discuss these questions and more, I'm joined by Anna Tangen, independent current affairs commentator, Wang Dan, chief economist of Hang Seng Bank, China, and Hong Hao, chief strategist at the Bank of Communications International. That's our topic. I'm Xu Jinduo. Okay, Wang Dan, I will start with you. The number for the third quarter, like 4.9%, obviously is lower than the market expectation. So what do you make of this number? But the first three quarters is okay, 9.8%.
Well, this is not a big surprise to me because it is a result of several intentional policy choices. We have seen that the deleveraging in the property sector has depressed the housing transactions and loans to real estate developers, which have been the real engine for domestic demand. And then the green transition in China has been quite serious. We have seen a very strong restriction on how much coal or steel that the factories can produce. And then on top of that, we have the zero COVID strategy, and that had depressed the consumption and services. So this kind of lopsided economic recovery had been the case since the start of COVID, and I'm not surprised that the slowdown is like this, given, in addition, that the last year's pace was quite high.
Mm-hmm. Well, Hong Hao, what do you see are the major contributing factors to the economic slowdown in the third quarter?
Yeah, well, I don't think that many people are surprised by this set of numbers, which, optically it looks very weak. I think, besides the real estate crackdown, we're seeing electricity restriction, usage restriction, and the effect on production. Basically, the restriction started towards the end of September. Mid-September. So therefore, I think going into the fourth quarter, we're probably going to see a more obvious and more significant impact coming from the electricity restriction side. So I would say that going into the fourth quarter, normally at this cyclical juncture, we could see some central bank easing and some policy support in some of the selected sectors that is experiencing particular difficulties.
Mm-hmm. Well, Tangen, if you look at the official response, the spokesperson for the Bureau of Statistics, is that this Chinese economic recovery is unstable, uneven, obviously due to some of the factors that's predictable, some of the factors are probably unpredictable.
Well, yeah, I mean, it's a really mixed bag, and there are things that we can talk about. For instance, in Dongguan, they're not able to produce. Factories are shut down for 3 days a week. That's the last I heard of it. But at the same time, employment looked pretty good. But there were also people moving back to the rural areas, so they're not being counted as closely as they might have been before. But the amount of manufacturing up tremendously. You also look at the surplus, and it was just huge. Imports were down, exports were up dramatically. So, we seem to be at this kind of watershed moment where things are going to be changing. We're going to start to see more price increases as we go forward that are going to be passed on to consumers. Because right now, the producers they're having to absorb a lot of costs from increased energy and also goods and things like that. Plus, you have shipping. That has been a massive concern. So you look at this thing, you can see it ahead. But what impresses me most is the fact that the Chinese government doesn't seem concerned. In fact, they've actually embarked on social engineering, in essence saying that it's time to prepare for the future. They're talking about education. I mean, when you start talking about 2030 goals and 2060 goals, 2060 is 4 generations from now of leadership. So that means that they have the confidence In the economy this year, they're going to be well above that 6% number, and they feel that this is the time to start. While everybody else is kind of on their back foot recovering, China seems intent on moving forward, preparing its people for the next economy, which if you're prepared for it, you're probably going to win.
Well, one then, before we go into the details, give us a wider picture of this economy. Obviously, we see there are factors contributing to this slowdown the economy, energy crisis, outbreak, flooding, all those factors. But at the same time, there are some bright spots on the Chinese economy, right?
Yeah, the brightest spots so far are actually in the manufacturing sector, and much of the industrial activity is bolstered, of course, by overseas demand. So that's why we saw this surging number in exports. Even if the growth rate has been slowing down for many categories in export, the absolute value has been at historical high level. And on top of that, there are a lot of new investment into the green transition related manufacturing sector. And we have seen aggressive investment, in fact, into the wind and solar industries. And that will lay the foundation for China's economy in the next 10 years.
So are you suggesting that, of course, we are sort of still in the middle of this energy crunch, but exactly because of the crisis, there's opportunity for green energy development long term?
Oh, absolutely. If you look at the reform in the energy sector, China has in fact already achieved more in the past month than in the past decade. Because if you look at the pricing mechanism in the coal power plant generated electricity, they were heavily regulated. Of all the power generated in China, only 35% had been allowed to trade based on market demand and supply, and the remaining 65% is fixed price. But last month, there was significant relaxation on how much the coal power generated electricity can fluctuate based on market demand. And that had been a significant progress because there were oppositions in the legacy system. So now it's actually a good window for further reform in those difficult areas.
Mm-hmm. Well, Hong Hao, obviously the Chinese spokesperson from the Bureau of Statistics said that energy crunch is a phase, means like temporary, and it will be alleviated or even disappear maybe in the long run. But it's not only a Chinese issue; it's actually a global challenge, right?
That's right. That's why if you look at the European energy prices, it's surging. It's probably at about 2 to 3 times the price level last year, and also the U.S. energy price is surging as well. Oil price is at above $80 a barrel. So and we're going into a relatively unpredictable winter where the weather conditions suddenly changed because of the El Nino situation. So many of the areas in China, temperatures suddenly drop dramatically this year and enter into the winter season very early. So I would say that looking at price movements, looking at the energy demand for the winter. And also looking at the investment that we put in the energy sector, both in China and also in overseas, it's hard to draw a very optimistic conclusion. But then at the same time, because we're transitioning towards a greener energy economy, and therefore, initially we have to put up, with some sort of disruption in traditional supply of traditional energy. So I would say that, all in all, we have to keep our eyes on the longer term horizon, while in the near term we probably have to bear some of the rising costs in the energy sector.
Mm-hmm. Well, in addition to the energy sector, of course, another factor affecting the industrial production is really about the supply chain disruption. For example, including the price of the bulk commodity, and also their shipping costs and the handling of those goods, at the port, sometimes being disrupted by small outbreak of the coronavirus and the measures to take that out. It's also, again, a global issue. How long can we expect somehow it will be stabilized?
Well, it's very difficult to predict. Obviously, one has to be a coronavirus expert, and even for the medical experts nowadays, it's hard for them to predict as well. We have sporadic cases here and then, and then because we have the zero tolerance policy, we basically shut down, the Ningbo port, for example, back in June, July, when there was, one or two cases there, and that represents 1/3 of the handling volume for that port. So it's hard to predict, because this virus comes and goes and continue to disrupt normal production and manufacturing. So one would have to expect that the influence could continue. And also, if you look at what the shipping companies are doing now, many of the shipping companies are willing to sign 2-year or even 3 years contract at the current price. All right. So what that means is that they were actually expecting the higher shipping costs to continue because of the COVID situation, also because of the supply chain disruptions.
Mm-hmm. Well, we expect the supply chain issue continue, Tang, and also we see this we call it the scissor gap. Industrial production price is not high, but is high, but when the consumer price is low, how long it will continue to be like that?
You're going to start seeing spikes in inflation coming up next month. And that's not just in China, that's across the world. I mean, energy prices, food prices, raw materials, shipping, you just start adding it up, and it's just impossible not to have that. I mean, the Fed was early on banking on this idea that this was going to be temporary, that it'd all go away somewhere in 2022. Now, I think if you look at most people, both with COVID in terms of distribution of vaccination, the shipping crisis, it's all looking at 2024 right now. But there are always good opportunities, as Dan was saying, by having fluctuating, coal and oil and gas prices. People are saying, look, this is the time to invest in electricity, in solar. Why? Because once you invest in the solar, for the next 10, 15 years, for the life of this, exactly what the cost is going to be what your cost is going to be in terms of producing. So ironically, you're going to probably see at COP26 a little bit of movement where people say, look, we have a very temporary situation where we're going to increase the coal. Because we have to. We can't have people freezing to death. But on the other hand, you're going to see the market moving to take advantage of what they see as an opportunity, and that is stable long-term electricity from renewables. And there's other parts of this. For instance, the United States now is under more pressure to get rid of these tariffs because this is one of the few things they can control if they want to attack inflation.
Mm-hmm. As we mentioned, the retail market more or less will be affected by the price change. So I'm wondering, retail market, we have this good number, pretty strong growth. But are you worried that that will be somehow affected by the rise of a price, for example? It's like a global thing. Look at the US, look at the EU, look at China, potentially. That could be somehow affecting people's spending intention or willingness.
Well, it is. I mean, last time we had huge spikes in oil and things like that, you run into a recession. It helps certain countries, resource export countries. Obviously, the Middle East is cheering this on. They are not so far signaling that they're willing to increase the oil production. And they're basically saying, hey, listen, when we were down, no one cared about us. All right, and we had to literally sell. We had to pay people to take our oil. Now you're asking us to forego that. So they think this is a time for payback, but it's going to have long-reaching, far-reaching economic consequences, especially to consumers. And I mean this globally. And this is not a great time for that. And that's why it's going to be more incumbent on countries to come together, especially the US, China, EU, to say it. I mean, EU is in really bad shape on the energy. They're right now, if you take the amount of energy in a barrel of oil, okay, they're paying 3 times that amount for the equivalent of a barrel of gas, all right, 3 times. So it's 80 now, they're paying 240. And while they have some reserves, they did not over this last summer build up the reserves. So if it is in fact a cold winter, the fact that they don't have reserves, the fact that the prices are high, you're going to see mayhem out there. And it's a question of what governments are going to do. Are they going to subsidize? Are they, how can they increase more? Natural gas is not something like oil. Right, you have to have the processing facilities to get this, liquidized and then sent to markets over, pipes or whatever. So it's very, very difficult. England is even worse shape because they really don't have any sizable storage. And now the situation with Europe is going to be very difficult. Europe may decide to prioritize Europe and not England, and that's going to be very, very difficult.
Mm-hmm. Well, Wang, you mentioned about these bright spots. One of that, in addition to the export, is really the retail sales, and we see the catering has basically recovered to the level, the pre-pandemic level, but the traveling is not that much. There are still disruptions for summer vacation, for the Mid-Autumn Festival, because of the mini outbreaks. So, what's your prediction? Looking into, for example, the year-end festivals, and how about the consumption? Do you think there's a strong consumption, strong demand on the consumption side, and that's something we can look forward to?
Well, after COVID, and because the zero COVID policy had been lasting for so long, there's some permanent change, I'm afraid, in people's behavior. You can see that quite clearly in the last national holidays. And there were a lot less incentive among consumers to get out because they're worried if there is some outbreak somewhere, they might get sent back. But when it comes to consumption, I do see a positive trend and a consumption downgrade parallel. Because if you look at the luxury market and high-end consumption market in large cities, they're doing very well. But the retail market in smaller cities have been continuously shrinking since last year. We've been monitoring 292 prefecture cities in China, and before COVID, their share of the total retail market was more than 54%. But after COVID, it was shrank to 48% in 2020, and this year even lower to 45% by the latest data. And that is quite worrying, given that the average consumption level in those cities are actually lower than large cities, and that means a wider range of population is affected. So by the end of this year, I don't see a reversal of the zero COVID attitude policy. And even into next year, because consumption is a function of income, we have seen a sharp slowdown in the personal income in China. Previously, it was within the 6 to 8% range growth every year, but this year it had been slowing down to about 2%, especially slower for urban consumers. So that is one challenge for the Chinese economy.
So obviously it's a mixed picture there. High-end consumers obviously not much affected. Yeah. Instead of going overseas for this international travel, they're spending on the jewels, on this very expensive articles. You see strong growth in that sector. Well, that at least that part will continue, I guess. If we continue with this zero tolerance policy, and obviously it's not easy. I mean, to travel internationally, you will spend your money somewhere, but you will continue to spend on the domestic market.
Yeah. Yeah, absolutely. I have no doubt about the consumer power or the potential of future growth in Chinese consumers. And one downside risk right now actually is associated with the property sector, because for many Chinese families, if they don't buy a new piece of housing, they don't have much more consumption, especially in terms of durable goods. And the car market right now overall is not performing well, although the new energy vehicles are sold at a stellar performance. So it's still a consistent story with China's green transition. The first step is still on the supply side. China wants to move more capital and the talent into those highly productive areas, and then the demand side reform will come at a much slower form.
Hong Hao, if you look at these, the challenges ahead, what about the toolbox, for the Chinese government to deal with those issues? Primarily, a couple of days ago, he said that there are still a lot of tools for the Chinese government to deal with those challenges if they, they are willing to do so.
Yeah, well, if we really want to stimulate the economy, there are many things that we can do. I mean, it used to be that, when the economy slowed down to such a level, then we can use, for example, right, property sector stimulus, right, so to encourage people to buy more homes, lower the mortgage payment ratio, adjust interest rates, et cetera, et cetera. But the thing is that, this cycle might be different. We're seeing, very resolute attitude from the top towards the Evergrande situation, and also, towards the curb of the entire public sector. And also, keep in mind that the 3 red line policy was put in place last year, more than a year ago, right? So, at the time when we put down this policy, we would have sort of assume or plan for some sort of disruption in the sector, such as the situation that we're seeing right now in the property sector. So one wouldn't be having too much hope for a sort of property sector stimulus like we did before. But other than that, as long as we can keep liquidity in the system abundant, then we tend not to have systemic risk. For example, the central bank has been active in the open market operation, by keeping the short-term interest rate low. Earlier today, we're seeing a substantial strengthening in Chinese yuan. That is showing off the central bank's attitude towards the currency as well, which is run side by side with our interest rate policy. So, so there are indeed many things we can do. I think even though the growth rate, the GDP growth rate slowed down to below 5%, the big question to ask not really is, whether we're slowing down relative to expectation, but whether we're indeed slowing down relative to our potential growth target, which is 4.5% for the next 10 years. And I think, we're sort of right on track. So right now, because there's a lack of systemic risk, and also even though the property sector is experiencing some disruption, but that is a policy by choice. And also the stock market is acting well, reacting to even very, weakish economy number today. So I would say that even though there are many things that we can do, but, we are somehow sitting on the hands and choose not to do much just yet.
Mm-hmm. Well, you talked about policy by choice, in particular in the property market here. Obviously, the government is cracking down the property market, but for a long-term goal. Tell us more about that.
Yeah, well, I think the property sector is identified as, one of the 3 big mountains that is suppressing people's livelihood, especially the Chinese consumption, which could be higher if house price is cheaper than what it is now, right? So I think, in many of the cities, according to a recent data analysis that is done by myself and my team, we're seeing in many of the tier 1 cities, mortgage payment as a percentage of disposable income has reached 80% or even more, right? So that is a very substantial level of disposable income that is going to mortgage payment, and that definitely is eating into people's consumption. All right, so by controlling property price inflation, making homes more affordable for more Chinese people would actually, help us to have better consumption data and also help us to achieve the common prosperity objective sooner rather than later.
Mm-hmm. Well, Anna, if you look at this job market, which is actually the urban unemployment rate has declined by 0.2% to 4.9% in September. So that means, of course, give the government this kind of confidence. It's no big trouble, because as long as there's employment, slower economic growth for the goal of long-term structural changes is okay.
Well, I mean, there's 2 things. Dan then mentioned that disposable income is down to 2% after being at roughly 6% for a long period of time, and that is troublesome. The jobs that are being offered are not necessarily the jobs that college graduates wanted. The government is going to extraordinary efforts to make sure that they're there, but you're also seeing big changes because of COVID-19. people are now saying, well, I don't know if I want to live in the city. There's too much pressure. There's a lot of things going on, and it's just too hard. So they're going back to the countryside. So what I really see is the long-term trend is the government is going to continue to try to push small, medium-sized enterprises, especially in these third, fourth tier cities. I've been traveling around China and I've seen what they're doing, and it's quite amazing. A lot of it is pushed into tourism and things like that, and there's a saturation point. But there's a lot of industries that are coming up. I saw a mushroom farm that was just doing fantastically and was creating a very nice income stream for the local people. And there were a lot of projects like that. So I think there's going to be, to the extent that there's going to be a push, it's going to be in these areas, not the traditional property area. But they have to be very careful. They can't see the property market go down because people have mortgages, and if they start walking away from it, that becomes a big issue because they've lost a lot of value.
That's right. But if you look at this overall, the year market, yearly market, the goal of the economic growth one time, 6%. Obviously, that should be no problem. I mean, IMF is predicting like 8% of economic growth for this year.
Reaching 6% is very easy. Even if we have economic growth in the fourth quarter below 3%, we still reach the 6% goal. But I think that's not really the central government's concern. The real concern now is to maintain the financial stability and prioritize climate change policies, and also some of the things that the public really care about the most, like healthcare, education, pension. And in the long term, there are also a lot of effort have to be done towards the platform economy, because the digital economy will be the foundation for China in the next 20 years. But still, we need more clarity on how to protect data, what kind of sensitive data or unsensitive data can company use to generate revenue. And those things are all information right now. So that's why we see a lot of chaos and sometimes inconsistency in the government policies, because in this type of transition, it's really hard to figure out what should be done first. So everything is piling up. It sometimes causes a lot of anxiety.
Well, obviously, President Xi Jinping stressed very much about digital economy. He also warned, Anna, in the written piece on Qiushi magazine here in China, he warned of, a situation many countries already would succumb to, because of the gap with rich and poor. There's this polarization politically and the rise of populism, and of course, people's dislike of globalization, free trade, etc. He obviously wants to avoid that. That's why he mentioned about common prosperity, long-term goal.
Well, exactly. I mean, when you start looking at the United States, many of those things, Europe, Brazil, many places around the world where you're having a tremendous economic disparity. And that's part of the reason I think that they adopted this common prosperity, and they're not putting it off. They're saying this is, in essence, a priority. We're not just looking at economics. You're not the United States. You don't judge your success on the stock market. You judge it based on what you've done for the people and how sustainable that is going to be. So I think this is going to pay dividends in the long term, but for the next couple of years, it's going to be tight, not negative, but just a little bit tighter.
That's expected.
Yes.
Well, thank you. That's all the time we have for this edition of Dialogue Weekend. I'm Xu Jinduo. Thanks for watching. See you next time.